All right. So with charting and understanding patterns, right? Can you hear me, Cam?
Uh,
All right.
uh,
All right, cool. So you always want to make sure that you're trying to see what price is telling you is actually about to transpire. So right here, when I'm looking at this, I can see like a bunch of different things. It looks like a bunch of different lines, but there's methods to the madness, right? So this little hump right here, if I zoom in on it, let me move this up a little bit. Cool. So if I zoom in on this, so you can see like a little hump, right? So this
mhm.
would be a left shoulder, right? So whenever you're trying to figure out a pattern, you want to try to see what you can piece together before it happens, because if the faster that you can see what the pattern is, the faster you're going to be in a position where you're going to be able to make money from it, right? So right here you have the left shoulder. You can see price shoot up, right? So this is actually a bull flag. So if I try this out, this would be a flag, which is bullish. So price goes to the measure move of the flag. And then this forms like this peak. So this peak, right? If I zoom in on it, this is going to be considered the head, right? So you have the left shoulder, you have the head, and then right here, you can see it doing the exact same thing as it did previously, right? So this is the actual right shoulder of the head and shoulders pattern. So left shoulder, head, right shoulder. Now, what you're trying to determine when you figure out what a pattern is you want to figure out where price is going to go based upon that pattern, right? So yeah, now I know it's a head and shoulders pattern, but what is price going to do? So what you're going to do is you're going to take a trend line. You're going to go to the peak of where price went to, okay, and then you're going to take that and go to the actual neckline. So the neckline is essentially where the left shoulder and the right shoulder connect, right? So that forms the neckline. And then from there, you can bring this measured move, this trend line, all the way down to where price is going to start to break down, right? So by doing that, and then you're going to bring it over, I always like to do like 25 degrees, give or take, like right about there. And then that's going to be your projection on like where price is going to go, right? So watch this. That's my projection. That's where I thought. I go over right here. Look at price. Boom, right there. Came back, hit it again, boom, boom. So that's your indication of how it actually works, the TA. And then once you see the smaller move, then you always want to zoom out. And by zooming out, you can see what a bigger move is, right? So the smaller move was the head and shoulders. Now, what's the bigger move that's going to transpire, right? And by there, I can see price dropping, right? And then prices kind of going up in this channel, right? So this channel, from price going up, that's a wedge. I see it as a wedge. If you understand patterns, that's what you would call a rising wedge. So how do you figure out the move of a rising wedge? You take where price drops and you place it right to where you think price is going to go to. So like right now, it's easy because price has already performed, it's already done what it's done. So it's easy to see. But when I'm actually charting, I'm creating this before any of the price actually takes place. You know what I'm saying?
Mhm.
So that's the move on that. Price comes to that. And then now we're making the bigger move. So based upon the bigger move, it's essentially doing exactly what it did. Drop came down, shot up, made people thought it was going to recover, dumped on your face, right? Did it again, came up, dumped on your face. So now I got double confluence. I have this measured move price coming here. I got a zone right here. So Arbitrum today coming to 126. That's my measured move. Let's see if it plays out. Can you follow that to make a little bit of sense?
Mhm.